He started with just $100, but instead of investing, this guy chose trading and lost almost 40% of it in 30 days. That's how the lesson began. This guy wasn't careless. He wasn't trying to gamble his future away. He was doing what a lot of beginners do. He had watched clips of people making fast money, posting screenshots, talking about quick entries and easy profits. And slowly, without even realizing it, this guy started believing that the smart way to grow a small amount of money was to move fast. Because when you only have $100, patience feels boring. That's the trap. This guy looked at long-term investing and thought, what's the point? Even if I make 10% a year, that's just $10. But trading looked different. Trading looked exciting. Trading made small money feel like it could become big money quickly. So this guy made the same mistake most beginners make at least once. He confused speed with progress. And this is where most beginners lose money before they ever build real wealth. In the beginning, trading gave this guy exactly what he wanted. Movement, adrenaline, hope. A small win here, a small win there. He'd make $5 on one trade, lose 3 on another, then make 8 again. It felt like momentum. It felt like he had found a shortcut, but he hadn't found a shortcut. He had found noise, because early wins can be dangerous. They make beginners think they understand the game, when really, the market is just being generous for a moment. This guy didn't know that yet. He thought he was learning fast. He thought he was getting good. So he traded more. He watched charts more. He reacted more. Then the market turned. One trade went against him, then another, then another. And instead of slowing down, this guy started trading emotionally, holding losses, cutting wins too early, and chasing recovery. That's when everything went wrong. Within 30 days, his $100 had dropped to nearly $60. Now pause there for a second. To some people, losing $40 may not sound huge. But that's not the real damage. The real damage was psychological. Because now this guy wasn't just losing money. He was losing confidence. He started doubting himself. He started asking the question most people ask only after they've already paid the price. Should I have just invested instead? That question changed everything. This guy stepped back and looked at both paths properly for the first time. Not through hype, not through social media clips, not through ego, just through reality. And what he realized was simple. Trading and long-term investing are not the same game. Trading is about timing. Investing is about time. Trading asks you to predict short-term movement. Investing asks you to trust long-term growth. Trading can give you action. Investing can give you peace. And for the first time, this guy stopped asking, how fast can I make money? And started asking, what actually works for someone like me? Because that matters. If you are a full-time trader with years of experience, strict risk management, and emotional discipline, trading can absolutely work. But this guy wasn't that person. He had responsibilities, a life, limited capital, limited experience. He couldn't spend all day staring at charts trying to outsmart the market. And honestly, most people watching this can't either. That's why long-term investing started making more sense. It wasn't flashy, it wasn't dramatic, but it was practical. This guy learned that investing is not about turning $100 into a fortune overnight. It's about building the habit, the mindset, and the system that can grow with you over time. The money matters, of course, but what matters even more in the beginning is becoming the kind of person who invests consistently. So this guy changed his strategy. He stopped treating his entire $100 like trading capital. He started treating it like the foundation of a financial habit. And here's the simple approach. This guy should have started with from day one. If you're starting with $100, this guy would divide it like this. Around $60 into a broad market index fund or ETF, something that gives exposure to a large number of strong companies instead of relying on one stock. Then $30 into 1 or 2 solid individual companies, businesses that are established and easier to understand. And the remaining $10, only if you really want to learn by experimenting, can go into something riskier like crypto or a volatile growth stock. Notice what this guy did there. This guy didn't put the full $100 into hype. This guy didn't bet everything on one lucky move. This guy built a base first. That's the difference. Because when beginners hear long-term investing, they often think it means doing nothing. But that's not true. Long-term investing is active in a different way. You still choose where your money goes. You still learn. You still manage risk. You still stay consistent. You just don't let short-term drama control your decisions. And that one shift changes everything. Once this guy moved toward long-term investing, something surprising happened. His stress dropped. Trading had given him constant tension. He kept checking prices. He kept reacting to every move. He kept feeling like he was one mistake away from wiping himself out. But investing felt different. He didn't need every day to be exciting. He didn't need every week to be green. He just needed a plan strong enough to survive time. That's what most beginners misunderstand. They think boring means bad. But in money, boring is often beautiful. The investments this guy chose didn't double overnight. There were no screenshots worth posting. No dramatic, I turned $100 into $1,000 in a week moment. But month after month, he started adding small amounts. $20 here, $30 there. And over time, that original $100 stopped being the whole story. Now, the story was consistency, and this is the part people underestimate. The first $100 is not powerful because of its size. It's powerful because it proves you started. Once this guy understood that, everything became easier. He wasn't obsessed with instant results anymore. He was focused on repetition. He wasn't asking, how much did I make this week? He was asking, did I follow my system this month? That mindset is what actually builds wealth. Could this guy still trade sometimes? Yes, but now it was different. If he traded, it was with a very small amount, controlled, separate from his long-term money. He didn't mix his future with his experiments. He didn't let short-term excitement destroy long-term progress. That's an important lesson. Trading is not evil. Trading is just demanding. It demands skill, discipline, screen time, emotional control, and experience. Most beginners don't realize that. They think trading is the faster version of investing. It's not. It's a completely different activity with a completely different psychological cost. Investing, on the other hand, is slower, but much more forgiving when done properly. That's why for most people, long-term investing is better. Not because it sounds smarter, not because it's trendier, but because it fits real life. If you have a job, responsibilities, limited time, and you're just trying to build something solid, long-term investing makes more sense than trying to win a speed contest against professionals. This guy learned that the hard way. He chased speed and lost. He chose patience and grew. And no, that growth wasn't instant, but it was real, it was stable, it was repeatable. And that matters far more than a lucky trade. So when people ask, long-term investing versus trading, which is better? The honest answer is this. For most beginners, long-term investing is better for building wealth. Trading might teach you lessons, but investing builds foundations. Trading gave this guy stress. Investing gave this guy peace. Trading made this guy react. Investing made this guy think. Trading made him focus on the next hour. Investing made him focus on the next decade. And once he understood that difference, he stopped looking for a shortcut. He started building a future. So if you're watching this with just $100 and wondering what to do, learn from this guy. Don't start by trying to move fast. Start by trying to stay consistent. Build your base. Use broad funds. Pick strong companies carefully. Keep risky bets small. Avoid high fees. Don't let excitement make your decisions. And most importantly, don't wait until you feel fully ready. Because most people never feel ready. This guy didn't need more money to make a better decision. This guy needed a better mindset, and maybe you do too. Start today, even if it's just $100. Because the biggest mistake isn't losing money once. It's never building the habit that could change your life.